Yo, what's up, everybody? It's your boy TSD back with another episode of Bullish Top Stocks to watch this week and why. But before we jump into it, I really appreciate you guys taking some time to watch me on the weekly. I'm pretty sure it's like one or two people just watching it over and over. But hey, I appreciate y'all. I hope it's helpful to y'all because for me, it's super helpful to plan my week, what I'm gonna do, most importantly, what I'm not gonna do. I'm not gonna chase. I have a plan, and I try to at least stick to it for the week. But also, hey, do your own due diligence. This is just what I'm watching, why I'm watching it. I can't give you advice, but hey, hopefully it's helpful for you to kind of, if you agree, if you disagree, hopefully it's helpful in some way. Like I said, definitely helpful for me. Please subscribe. Another thing, please subscribe here on YouTube. Give me a like. It helps me out. It helps me feel good about myself. Help me feel good about myself. But also follow me socially, real_bullish. Basically, wherever you get your social poison, if it's Twitter, if it's Stock Twist, if it's Instagram, whatever, follow me. Let's engage. Let's talk about it. All right. But anyways, let's jump into it. I had a decent week with my picks last week. So if you want to see it, I'll link it at the end. Of course, I'm gonna regurgitate Tesla this week, but I think that's the only one that I'm rewatching this week. Not to say I'm not watching all the other ones, but hey, that was last week. This is this week. I'll definitely drop that old video at the end, not the old video, last video at the end, and because I'm the way I look at it. Hey, these are still moving. These are just for this week what I'm seeing, but I'm still watching some other ones. It takes 2 seconds to go through a list from 3 weeks ago and try to pull those up and kind of see at a daily, weekly level kind of what they're doing, and that's how I play these. But anyways, jumping into it, the market was looking super bullish, and that's kind of what I'm showing here. If you can't see it, hopefully hopefully you can see it. But I'm looking at QQQ, which is tech. It's an ETF that mirrors kind of the larger tech market. Same with SPY for the S&P and DIA down here in the bottom right to look at the Dow Jones. And basically what you saw is we saw really strong movements, not last week necessarily, but the week before last on Friday. Thursday was kind of leveling off. Friday we're definitely seeing, so yeah, 9.8, we're seeing some of that come in. That's too far back. But basically, yeah, 9.18 and stuff. Yeah, we're playing here really well. 9.24, which was basically let's look up 924. What day is that? Yeah, so that was that Thursday, and you kind of see it across that Thursday and Friday. We were starting to see kind of some indices come back and stuff, and we were looking really bullish, even in the early part of last week. But kind of what we saw on Thursday PM, if I'm sure you're following it, but also into Friday, kind of what happened there. We're kind of seeing some. Donald Trump, unfortunately that he came down with COVID and kind of the markets were reacting to that. And also on Friday, we saw a little bit of negative sentiment in terms of trading on the bear side because of those jobs report. The first one talk about, the basically, hey, markets were reacting negatively to the president having, COVID and kind of like the progression of his stages of, being healthy and kind of getting treatment along those lines. So the market doesn't like uncertainty. And unfortunately, Thursday PM until Friday, we were kind of, and we're still learning more now, right? As far as the experimental treatments he's going through, but also kind of like his progression of being asymptomatic, supposedly to having, some symptoms, to having moderate symptoms, to being airlifted on Friday under his own power, walking to the bird and stuff, to being dropped off to Walter Reed Medical Center, and then kind of like the reports of like the treatments he's going through. He's basically taking like 2 COVID experimental treatments to kind of fight that. And then I've heard estimates come in like, hey, Monday he could be back into the White House, working and stuff. So that's a pretty quick progression across. But we'll see what comes out of it early part of the week. The other thing that we saw on Friday was a jobs report coming in. We had 660,000 jobs added in September. That was under the market expectations, or the expectations. I think it was like mid 800s, lower to mid 800,000s. So we kind of missed that. Is you kind of see those two things compounded Thursday PM with Donald Trump unfortunately come down with COVID, leading into Friday, like the progression of his like state or health state, and then his airlifting or he's going to Walter Reed Medical to undergo treatment. And then, early in the morning on Friday, you did see that jobs report come in at lower than expected. We're still under, the thing about that, hey, we're improving in terms of our, jobs numbers, but we're not improving as fast as some people thought we might. We're improving at a little bit slower rate. I think the unemployment rate right now is 7.98%. Man, that's good. So, we're getting better, but also, it's going to take some time to get there. A couple other things that came out last week was Disney announcing 28,000 layoffs. That's pretty big. That's pretty substantial. 30,000 layoffs, basically, in terms of, people that work at their, I think these were furlough workers. So basically furlough, they were still part of the company. They weren't really receiving payment, but they were all getting their health benefits and they were still employees. Unfortunately, we saw them being, announced as layoffs. Basically, people that work for the park. It makes sense. People are not going into the park and stuff. And you kind of see that in the sentiment here, maybe not QQQ, but some of the other ones, you kind of see that baked in, that bad news as well. And also the other thing that's coming out is the layoffs for airlines that are coming possible or coming due possibly. Earlier in the year, airlines, a part of their agreement to take financial or federal aid was that they had to furlough, not lay off workers. That is lifted as of, I think, the last month, right? So the beginning of this month, I think that we'll kind of see kind of some of that bear into it. But anyways, that's kind of what I saw in terms of news that was moving markets. Definitely, we're definitely seeing some good stuff coming out. And then, unfortunately on Friday, 10-2 was Friday. The markets were just kind of, barely making gains. But overall, it's not that bad if you look at Friday. I think QQQ, which is NASDAQ, was taking the majority of the brunt down, almost 3%. If you're just looking at this ETF, 1%, 1.5% basically, respectively to the SPY and DIA. So it's going to be really interesting. It's going to be really interesting Monday to kind of see how it plays. And I'm just going to break down the QQQ real quick. It's still, and the reason I'm not like, oh shit, what's going on, is because it's still in the channel that I was kind of had set up for a couple days. You definitely see, 928 coming in and being kind of more strong, so stronger on Monday, and kind of some of that trends going up. It was trending the right direction. It was bouncing off that bottom channel that it created for itself, still like over that really important 50 EMA that I was watching and things like that. But unfortunately, we definitely saw that sell off, and you see volume coming in, right? So for the past couple days, before that, so 930, which was basically Wednesday, Thursday, we're seeing a lot of good momentum coming in over volume over average in terms of the tech ETFs and stuff like that. But unfortunately, Friday we did see a really bad sell off. Coming on RSIs was going down, and it's not picking up yet. But also what we did see, starting on 930 was basically, so that Wednesday that's basically the first time since, what was that? The big sell off on 9.2 that we were starting to be bullish. So I think there's still opportunity there. I think that everything we saw on Friday was kind of like knee-jerk reactions. Specifically, I'll go into my first bad boy is Tesla, but you definitely see a knee-jerk reaction there. One of the reasons why I was watching Tesla last week, let's just jump into it. One of the reasons why I was watching Tesla last week was because I was really, really happy with not happy, but I was really looking forward to kind of their indicators. This thing has been bearish since basically 9.3, 9.2 when we saw, and if you look at QQQ where it started that tech sell-off, it's basically been bearish. If you look at the day-over-day year chart, for the most part, it's battled with trying. This was, I think, battery day where we were hoping that it was going to turn around, and it wanted to, but it didn't get that catalyst yet. And then I was hoping we had the delivery report on Friday, so I was hoping that was going to be the catalyst because it was looking even more bearish. I was like super excited about it. And then unfortunately, you saw, if you break it down, you saw, the news come out about, unfortunately, Donald Trump having COVID, and you kind of see that in here. Yeah, exactly, like 4 o'clock. You kind of see that, oh shit, oh, what the hell's going to happen? And then you definitely see a really hard sell-off, basically extending till Friday, where they tried to rebound. Unfortunately, hey, I was kind of I was already kind of watching this, and if you're watching it for any amount of time, you knew that 450 was going to be a really hard resistance. And the reason I say that is because for the past few weeks, it hasn't been able to necessarily break that. And the thing with support and resistance, it's a general thing. It's not at this line. It's about that line. And you saw the same thing happen here. So when it was 448, I was like, fuck it. I need to protect my chicken. I need to take my own advice here. I sold off most of my Tesla position, unfortunately, here, but still in it a little bit. But I'm going to wait for this really, really good reversal because, and I'm calling out, this is my first one I'm watching, if you can't tell. It's Tesla, but also automakers in general is what I want to watch. So Tesla delivery numbers came in on Friday like AM-ish. And so they basically have 139,300 deliveries for the quarter, and it beat their expectations of 137. So the market generally was saying, hey, we plan that they're going to have 137 this quarter. Well, they actually came out at 139.3 or whatever, however you want to look at that. But over the recent days, people were getting so bullish on this that they actually moved the target and said, oh, actually, let's push that number up from 137,000 130,000 to 140,000. So unfortunately, Tesla didn't reach those stretch goals, but also the numbers that they gave us, the 139,300 from Tesla, that was more on the conservative side. So the company said. So still, there's a lot of room to play in there. Unfortunately, like I said, it beat expectations, but it's always with things with releases or earnings or something. Like, it beat expectations, but did it beat it enough? So I think there's a few things that compounded with the basically 7.5-point sell-off on Friday, and that to me is exciting because that's just, the company fundamentally is, if not more sound than better. The reason I say that is because those deliveries for the quarter bodes well for the earnings that's going to come up on 10/28. 10/28, Tesla has earnings. So if deliveries are basically there, I couldn't imagine what the earnings is going to be at and the build up to that. So I'm super excited about it. Maybe at that point we can finally break that 450, 500 range that we're seeing being super areas of resistance over multiple weeks. So yeah, hopefully we can get back to that. But also, I think that bodes well for the AutoNation or automakers overall. And the reason I say that is because Tesla and Ford, the two automakers that I follow pretty closely over last week, both gave me really good 6% gains over last week. And I love Ford because it's basically all algos trading against each other, algorithms and stuff. If you break it down to the 1 minute, you could basically see these going like in a barcode mode. And I love that because you can count on it to be, hey, from mid sixes to sevens, hit that really, really good sweet spot. And I definitely saw that for Ford last week. But also automakers, they also had something that came out last week. Oh yeah. So car sales overall showed strength in September with an annualized rate of 16.4 million units sold for automakers. So that's the third consecutive month in a row that it beat expectations, So I think that bodes really well for not just Tesla, but automakers in general. The two ones that I primarily watch basically are Tesla and Ford. Some BMW because I love BMW as well. But, both of those last week were really strong plays for me. And with this 7% basically decrease on Friday from a multiple things. So, a multiple things hit Tesla at once on Friday, which is why I'm excited for this week, the reversal from that. When it eventually finds the bottom is, you had Trump's COVID thing that you definitely see it in the chart. Hey, they announced it, boom. Markets were closed overall. When they opened back up, they were just shitting. You had that. You had you had the employment number kind of hit. That's a double thing. Where we were definitely below expectations there for unemployment numbers in general. So that's going to be at the macro level really hard to overcome. But also that stretch goal where they didn't quite hit of 140K, but they did beat the original expectations. So that was great. So I think just a knee-jerk reaction, and I love knee-jerk reactions because that's volatility. And then I'm going to play that volatility to the upside. So when Tesla decides what it's gonna, or when the bears and bulls kind of figure out, I don't like to play when the bears and bulls are fighting. I'm gonna come in when they're done, and I know the thing going forward. But also some other cool stuff that came out. So 124,000 Model 3s and Model Ys vehicles for Tesla were produced that quarter, 56% more than the year ago quarter. That's amazing. That's just growth, and they're doing it when automakers are producing less. Delivering less during COVID. Like, man, Tesla's really, I think, hey, maybe I'm just a fanboy, but Tesla's really coming strong. The chart overall, if you break down the technical levels, it's still in a channel. It's still very channel-y, boom, boom, boom. And I was waiting for this to break out. It didn't do it, but also, it's still within the channel. We'll see where it bounces, or if it just makes that new low and bounces up, because as we see, the 10 or 25 EMA has been really good support. As far as a break, but definitely that 50. So, all trends are going up. This thing wants to flip to bullish eventually. I think we'll see it. We haven't quite seen it when it wants to come close. It wants to cross over, it doesn't do it. Once it cross over, it doesn't quite do it. We just need a good catalyst, or at least a market that helps us out. But I really like Tesla going forward, especially into next week. All right, the next one I'm going to go into, enough about Tesla. The next one I'm going to go into is Domino's Pizza. And the reason why I like Domino's Pizza, well, I just like Domino's Pizza in general. I had Domino's Pizza over the weekend. I'm just going to say I love Domino's Pizza, from not just because of that Brooklyn thing, or that Brooklyn like large, extra large pizza is good as fuck, but also because they're so COVID proof. And I'm going to go into why. Even just looking at the charts are sexy, but also let me just go into the catalyst real quick for that. They have earnings on 10/8 in the AM. So this week they have earnings Thursday morning, right? We'll see that come into play. And the reason why I like Domino's is, during this time of COVID and stuff, there's been 15,000 or so restaurants that have failed or kind of went bankrupt during the coronavirus pandemic, according to statistics from Yelp. That's not the same for Domino's. Over that same period, their sales have increased actually 16%. And let me tell you why. It's because Domino's was so early in basically what I like to call like the digitalization actually of food. And that's kind of what I'm going to call it. But while other companies, food delivery companies, are kind of relying on deliveries like Uber Eats, DoorDash, all those other ones. We don't like at the consumer level. Maybe we don't care, but for these companies or these restaurants that are depending on that, they get such a reduced margin from that it really hits their sales. So even though, hey, yeah, maybe their online sales it picks up, that doesn't translate to the in-store sales where they have a better margin. Where already margins for restaurants are razor thin, doing it like mostly delivery in terms of these apps that take a lot of the monies from that, it's going to hurt them even more. But that wasn't the same for Domino's, because Domino's already had a proprietary order and delivery system built out even pre-COVID, and that trend only increased during COVID. Their app is great. You can GPS track where your food is. You know exactly where your food is at all times. It's in the oven. It's getting prepared. It's getting checked. It's getting delivered. The guy's down the street. He's at your door. Touchless delivery. They were in such a great position for COVID that it's not even funny. But that's because I like to think of Domino's as a tech company that just so happens to sell food. And what I mean by that is fuck omnichannel. Omnichannel is like all these channels that they connect to the customers. Domino's is basically, and you can see it during COVID. Hey, they really didn't have a COVID effect from that. They did some, 318. Hey, we saw that dip. It didn't last long. It definitely shot off from there and kind of it hasn't stopped yet. And I don't see it stopping anytime soon. This is a really easy long for me. But basically, it's because Domino's channels are so digital. You can order via desktop. You can order a mobile app. They have apps for your iPhone, iPod Touch, Android, Samsung television, the Pebble, Android, Apple smartwatches. You can order Domino's from Twitter with a pizza emoji. Amazon Echo, hey Echo or whatever, Siri, order me some Domino's. Oh shit, she about to order me some Domino's. Don't order me Domino's yet. Maybe later. Google Home, Slack. You can order Domino's from Slack, Facebook Messenger. Fuck omnichannel. This is all channel. They're gonna get you wherever you go. Domino's, it's a tech company that just so happens to sell fucking pizza, and that's why I think they were so prepared for COVID and after COVID. That Ann Arbor company, hey, they're coming strong with that shit, and that makes sense, But yeah, in its most recent quarters, operating profits increased by 17.7% to 164 million for the last quarter, and analysts are expecting this to continue. But also there's some headwinds, as we see with like Costco and Home Depot and Lowe's. There's rising labor costs and rising costs of doing business. You have to get your proper protective equipment. You have to start paying, laborers more that are on the front lines dealing with this pandemic and stuff. So you're paying them a little bit more. Also, Domino's has some debt carryover on its books that's going to come due in the next few years. So there's definitely headwinds, but also I think the tailwinds far exceed the headwinds. Because all that digitization is expansion, that costs money. If you look up Domino's and do your due diligence on Domino's, they have fucking jobs where it's like data scientist jobs at fucking Domino's. A Domino's data scientist, fuck, that's crazy. But that's how far along they are from, other things. And you see other companies like Chipotle starting to do that kind of model now, where you can order free delivery from their app. So I think we'll kind of see that. But Domino's is definitely on the forefront. They're beating all their competitors like Yum. They're beating, Papa John's and Pizza Hut and Little Caesars. They're just in their own league when it comes to that. But what I'm also seeing is that price targets are increasing. I saw two recently over the past week, a price target increase of 445 and 449. I like to take, like, over the recent price target increase, I like to take the average of them and then see what that is. So that's about 447 price target increase averages. So take it for what it's worth. But basically, I see great upside with that. In terms of like tailwinds that are coming in, and for Domino's, hey, you're kind of seeing that here. It definitely broke. So I would like it closer to this. And if you're just looking at the technical charts, hey, it's looking bullish as fuck. And the reason I say that is because you see it just broke an area of resistance before of 423.15. It's pretty close to that. But also, yeah, it broke that for sure. It has a price target increase of 464, so we're kind of going heavy. It's a little, honestly, closer. We'll go through a couple other things. It's off of the trend, right? It's going up. Great volume coming in. Not over average yet, but still the volume is there. That's bullish. It's starting to get a little bit overbought in the RSI, so people are running this thing up, which is to be expected. But for Domino's, this motherfucker can run hot, like this, what is this, 89 fucking RSI? Are you shitting me? And right now it's, what, at 72. So still, hey, if you're looking at traditional 30 to 70 RSI model, it's overbought right now. Maybe we'll see some cool off there, but it just broke a really important area of resistance, and now it's using that as support. What I like about just these candles is that, hey, like, it was trying to break over it, and you see these dojis were basically like, indecision markers, but there's no volume yet, and it finally broke over with the indecision doji here, and then you saw really strong, like it's basically like, hey, who's winning, finally broke over, and then hopefully you see volume start to come. Like I said, Friday was a weird day, but I think that bodes well for like breaking this next trend and staying there. I think that this is super bullish. The MACD is definitely bullish, and it doesn't show signs of converging. It's getting further apart. It looks like it wants to get further apart, especially as you're coming closer to earnings. The only thing I'm worried about is that for me, I want a good risk to reward ratio. I want a 2-to-1, a 1-to risk reward ratio. So for every dollar that I'm risking in terms of like losing, I want to be able to say I can make $2 at least. And I don't see that with this yet. It would have been there if I was like a day earlier, 2 days earlier. But since it has such strong movement on Friday, it's a little bit in the middle of what I'm characterizing as support and resistance. So I play this two ways. I'd wait for the break of this, or I hopefully this thing retraces a little bit, gets a little bit closer to what I'm saying is support, and to kind of get that risk reward ratio. Either way, I think it's going to be really interesting to watch over this next few days, because you have, you have 3 days until earnings. So it's going to go one way or the other. We'll see what it does, but it's looking super bearish right now. And maybe I'll just do like a momentum scalp off the top and try to, get like a quick 5% off of it, because this thing is looking hot, hot, hot. The other one I'm going to jump into, enough about that one. The other one that I'm going to jump into is Nvidia. And if you followed me before, I've called out Nvidia before. And I called out Nvidia because they had, I called it out here. So about the week of 8/31, because they had a presentation going on for their new GPUs. If you know me, I'm a gamer, I'm a nerd, I love all that shit. But yeah, so they have another GPU technology conference, or GTC. So GPU Technology Conference, or GTC, that kicks off on this Monday, and it's going to last until Friday. So it's a 5-day event. It starts 10/5 and it ends 10/9, and it's basically 24 hours across all time zones. It's going to be crazy. It's going to be great. And what you're going to see in that, they're going to talk a lot about stuff. So right now they have a market cap of $322 billion. So it's not a cheap company, I will say that. But at the same time, what I like about this is that, if you follow the last conference that they had when I called it out, you saw that really that's the first time that they busted 589 in terms of, in terms of their new support or resistance levels. So it's still going to have that momentum here, and I think we're going to see more of the same here. I just marked here kind of like the last conference that they had with their graphics card. It was a graphics card that they had, and it was basically like a 2-hour event. This is a 5-day fucking event where they're going to talk about all things. Basically, they're going to talk about like I said, it's a 5-day virtual event, 24 hours long. They're going to talk about AI. They're going to talk about edging, not that type of edging. Y'all nasty. Edge computing. They're going to talk about cloud computing. They're going to talk about startups, hardware, software, you name it. They're going to talk about it. But to me, the most important thing that they're going to have is they're going to have the ARMS Dev Summit. And that's what I'm most excited about. And if you want to look at that, it's going to be Thursday morning at 8:20 a.m. Pacific is the ARM Dev Summit. And the reason why I'm excited about that one is because this is the AI company that they purchased from SoftBank with much fanfare, I will say, for $40 billion. So this is kind of the first time we're going to see like what they're going to use them for, how they're going to incorporate them into their current NVIDIA awesome already ecosystem. And I think the market was really excited about that when they first bought them. So now we're going to get the first real glimpse of how they're going to use them. And I think we'll see a really, really fun pop about that on that. We've already seen price target increases come of 525 to 600. So the truth to me is somewhere in the middle of that. I think that hopefully we'll see this resistance line of 589 tested. I like a lot of things about this chart. You do see a recent sell-off here that started at 10.1. And I think the reason for that is because they actually had what was that? What was that? They delayed their graphics cards. They announced last week. I want to say it was last week that they're going to delay their graphics cards by a couple like a couple weeks. I want to say. So there's kind of some of that built into there as well. Where hey, people didn't like that. It was going to break this. It wanted to try to test this resistance line of 555. They got some recent bad news, and then what we talked about already, like the Friday sell off and shit didn't help. Tech was down in general. And tech led the way down in general. So there's some of that built in, but I think that bodes well for what we're gonna see it do this coming week. It cooled off, and I think that's a great position to stay. Okay, does it hold the support, and then go from there, and then go from there, right? So yeah, overall, Wall Street, even though the recent price target increases I saw went from 525 to 600, Wall Street in general has a price target of 553. So still well below that. And if you play it right, you can get that really good 2-to-1 ratio, 1-to-2 ratio, whatever, however you look at it. So I think that it's going to be a lot of that coming into play here to make this a very attractive company coming forward. What I like about this, like I said, is you definitely see that sell off, and this no fault of their own, well, maybe some fault of their own. They tried to test that 555 line. It really didn't happen there. But also they got some bad news, like, hey, we're gonna, some stuff is delayed. The graphics cards are delayed a little bit. So you see overall some of that built into there as well, like I said. But also, hey, Friday came in. Friday came in and it was a massive sell-off, but I think that bodes well for getting it at a better price to test that line now going forward into that GTC or GPU technology conference. Cool. All right, I'm gonna just keep on moving. The next one was interesting to me, and that was Bed Bath & Beyond. And if you've already followed the market, you know that Bed Bath & Beyond already got their 40% increase here over the last couple of days. And the thing, and why I want to watch this, right, is because second quarter profits for same stores were up basically for this last one, and they actually went 4 years without that happening. So there's this new hotness that came in. The new CEO, his name's Mark Trenton. He's only been CEO for 11 months, and already we're seeing the impact of his like digital transformation, what he's calling omni always transformation, right? So digital sales were up 90%, and that's what we're seeing with these companies that are positioning themselves better for COVID, is that they're shifting to be more digital, right? But what that also means is that your sales in stores are going to be a little bit cannibalized. They did see a 12% decline in store sales, but with the better margins for digital, that's fine for the most part. So I think they still have some things to figure out on the short term, but the long term, I think the sentiment is great in terms of like where they're moving to be more digitally focused. So I think that, I will say that, hey, if this was something that you looked at, last week or the middle of last week, it would have been a little bit better. How I want to play this is I want to see if it's going to break this area of support or resistance here. And what I basically did was a quick like Fibonacci retracement and said, okay, cool. From this point to this point, where's the bottom? And you're seeing, maybe 23.6, which is $17, or maybe I would think maybe it's going to fall somewhere between 23 and 38 because it's done so in the past. So as the bottom, so I'm watching this not as to chase the top. I'm watching it. Well, I could do it. You could do it that way too. If it breaks this line and holds and goes forward, what I don't see that happening is because like it made a big movement over last week. You're going to have a lot of profit takers, a lot of motherfuckers like me that want to take profits, and you see that because you see a double top here, and you'll probably see some of that price if it doesn't hold there, if it doesn't bust this, retrace down. And that's exactly what I did, this Fibonacci retracement, to see, hey, where can I expect this to start evening out? These are all self-fulfilling prophecies too, right? Like it works because people use it, right? And so I'm going to see if it breaks and holds, or if it bounces off of one of these two fib retracement lines, and then get into it a little bit more. But I do see that, hey, they're making a lot of headwinds. So maybe it will break and hold because they're moving to more digital. They have this new hotness for a CEO who's leading that omni always transformation, but also they're partnering in time for the holiday season, and they're moving into delivery with partners that can help them basically have same day deliveries. That's crazy. I just actually, so when I was putting this together, I was at the gym, and there's a Bed Bath & Beyond right next to it. And so I'd never actually been to Bed Bath & Beyond, but they have everything you fucking need. I talked to the employees. They were super happy. They're getting paid more. They're working more hours. Basically they see like in-store sales. They do see in-store sales like going down in terms of foot traffic, but they're saying, hey, carts are loaded, people are coming in. Even though there's less people, they're more engaged customers. They're less basically looky-loos. There's less people coming in and looking. They're buying. They go in there for a reason. They have everything from Dysons to Roombas to candles to like seasonal shit. You know, hey, I've never been to Bed Bath and Beyond, but it was an interesting company. Everyone had like a boo, so that was a thing. Like it was like I was the only one that was in there by myself, which is kind of weird. I didn't buy anything. I just did a quick lick-loo, walked around and left. But anyways, I think that Bed Bath & Beyond is going to be very interesting, especially after that 40% movement. So you see good news and bad news come in the rules of 3 days. We saw 2 days worth of movement, as you can see here, right? As you can see, hey, these past 2 days, boom, really good movements. Will that extend to a third day to break over this resistance line? We'll see, but I'm watching it either way. I would love if it broke over that line and held, because that's easy for me to say, okay, my stop loss is this line. I'm going to take 5% off of the top as my price target, or whatever gives me a 2-for-1 ratio, or 5%, but I'm going to use this line as a stop loss. If it breaks and closes under that line, I'm going to sell, you know, and that's kind of how you hedge your bets, or how I plan my trades. But overall, this thing is looking real bullish. Look at this fucking volume. 80 million shares traded in that day when the average is 7 or 7.5, 8. Wow, that is crazy. RSI has definitely picked up 83 here, but I will say that, hey, the RSI is pretty extended. This isn't like a high flyer, you know, that can go like 88 like we saw the other one and still making gains. This one is probably a little topped out here at fucking 85 after that movement. But the interesting thing is that MACD is still bullish as fuck, you know, and increasingly so. So we'll see how that comes in. I think this is going to be interesting. I want to see how this is going to play out on Monday in the early part of the week, but I think it's going to bode well anyways, because futures actually, futures, when I looked at them, were down, with, I think, the NASDAQ leading down on the futures, but still, hey, take it with a grain of salt. The other one I want to call out is also one that I've called out previously. I think this was actually my first episode I ever did, which isn't that long ago. Rocket companies, which if you've been watching them, Quicken Loans. There's basically, Rockets is Quicken Loans, and they're the largest home originator in the United States. They serve 9%, almost 10% of the U.S. home mortgage population. Huge upside since it's a $2 trillion market, not billion, trillion. And they're about 9-10% of that addressable market. Home originator, right? They went public in August, as we saw, you know. So what is that? 8-6? Yeah, August. Early August, they went public for the first time. And day traders and swing traders were fucking loving this goddamn thing. Probably because of the addressable market. Probably because there's not a lot of their competition. And Quicken or Rocket Mortgage Quicken were really that first, like the push into that whole like digital like mortgage application, refi application. You know, they were really first into that. So there's some of that built in, but they're not a new company. You know, they've been a company since 1985. They started trading right around $18, right? Right now they're at 23. We saw the high of 34. And the reason I was watching this earlier in the year was basically, maybe I called it out there or whatever, I forgot the exact date, but basically what I liked about this was the ABCD pattern. And if you don't know what the ABCD pattern is, basically you have a leg for A, all the way to a resistance of B, which is your break. You have the C, or consolidation period. And basically how I like to think about the price target is I like to take the A leg, which in this what is that? 7, blah, do some quick math. I can't do math right now, but basically you have like $9 right here, right? And you can think of the price target as when this breaks out, you add this leg to the breakout point, which gives you about 35, 34. So it basically follow that exactly that ABC pattern. A, B, C, add $9 to the break, you get 35, 34-ish. So it followed that. And what I liked about that is because it had that trend, people saw it, they came into it, but also I wasn't gonna watch this again because after you have an ABC pattern, basically you have a retracement or you have people taking profits and stuff. You're shaking out all the weekends, shaking out all the people like me just in it for the money. But at that point, why I'm bringing it back up is because over the last 2 days, so what is that, 10-1? So basically, you're looking at Thursday, it finally broke out of that downtrend, found some really good support. I would have liked it closer. I wish I was watching this on Friday because it would have been better. Oh, that's good. So basically, but the important thing is it broke out of the downtrend and now it can kind of resume that climb or that ascension up there. And basically, hey, it's been downtrending, basically until this is 9-2. So it's been downtrending for a month already. It's been super bearish. You see this MACD going down, starting to converge back here. So that's what I'm excited about for Rocket because people have eyes here. People are watching this thing. it's starting to get bullish. You see RSI picking up. It's no coincidence. And then you see the price action target, the candles moving up. Not no whippy ass candles either. These are strong ass fucking candles. Unfortunately, since it's so young, you don't really have the averages. So I don't know exactly what the averages is for trading volume. But hey, the more time you get, the better you're going to be able to call this. So since it's so new, since it's like recent IPO, it's going to be really hard to play. But still, it cooled off. But I'm also seeing a lot of chatter about this again. I follow like a couple podcasts, like Benzinga and Fool's podcast, and they were both talking about how like they're really long term bullish on this one. So yeah, I think that's going to be a really good one overall. I've actually used Rocket Mortgage recently, and I really found it really easy to use. They're very, not, I won't say aggressive from the sales side, but they're very persistent. But they're also very, that's their job. They're trying to get you in their funnel and stuff. I get it. I mean, I work in marketing. I get how that whole thing works. But I thought that they were very persistent, but also across different channels. But also when I told them, hey, yeah, think about something else, they kind of respected that. So I thought that was cool too. But the tech is easy to use, not so much for nuanced things like first-time homeowners or VA loan members. So it's basically they made it for the masses, and I think now they need to make it specifically for all different like really niche use cases. But at the same time, hey, I think this is a lot of upside, especially since it's following. I like that it followed overall patterns, and we'll see what this shakes out to. I like to see the break of, like I said, don't buy in the middle. This is like, you don't know what it's going to do yet. I want to see it come down or break over this 26.73 resistance, which was the break of this one. So I would think, hey, this is going to be a real interesting area to play with because it was an ABCD pattern break before. So I think it's going to either get some really hard support or resistance here. But anyways, that's going to be interesting to see because it broke out of that downtrend. But anyways, all right, I did it really quick. I went through because I noticed that the last one was 43 minutes long or some shit. So I tried to go through it again, a little bit quicker. So let me just recap them again. Tesla, hey, I love Tesla. You saw a 7% down increase on Friday from I think a lot of factors that were knee-jerk reactions. So I'm looking for that on Monday, Tuesday, Wednesday, Thursday, Friday of next week, of this coming up week, to kind of see where it's going to play. I'm going to wait for bottom out, and I'm going to try to climb that top up. And Tesla is perfect for that. It's the perfect Tesla and Costco are the two stocks to me that are perfect for intraday or intra-week, intra-month trading. You can do it, a lot of different ways. The other ones is Domino's Pizza. Domino's Pizza is interesting to me, for a lot of things, because to me, hey, they were on that forefront of that, COVID-proof company. They are the epitome of COVID-proof company to me. Like I said, 60% increase over the past few months when 15,000 restaurants according to Yelp are going out of business. So I think that's more longer term. I think right now it's not really priced in terms of like it doesn't give me right now that risk reward ratio I want. So we'll watch what it does. I would love for it to have great earnings and me get it right before the earnings, get that 5%, it pop, it go down, but I'm already out, and then get that reversal like I tried to do with Nike. So yeah, Domino's is gonna be an interesting one for me. Nvidia, it's gonna be so interesting because there's a 5-day long GTC, a GPU technology conference going on from Monday to Friday, 24 hours. That's a lot of catalysts. We'll see how it works out there. Bed Bath & Beyond had a 40% mover. If you follow the 3-day rule, that means one more day of solid movements. But also, hey, that's just a theory. You will see how it works out. I would like for them out of the reversal. I like reversal plays. Bed Bath & Beyond is definitely one I would watch for reversal. Rocket companies, a lot of chatter, a lot of movement. It's patterny, it's new, but also, hey, it's a $2 trillion potential market in the United States, and they have 10% of the market cap. So that's amazing. Catalyst Corner, parting takeaways, and social. Hey, real estate is still on the uptrend, and I expect that to continue more, especially as people go back to work, especially the early part of next year. But also, Hilton, going to stay more and going to visit families if they're traveling for the holidays and stuff, and hotels and shit. So I expect real estate to be on the uptrend for a while. Energy is on the downtrend. Huge layoff expected. So I think, definitely just this month, Royal Dutch Shell, Lionel Basil, Marathon have announced 10 to 12% workforce cuts as they kind of shift, more, in response to COVID, but also as they shift more to what people are seeing as kind of like that green energy kind of wave, that's why I think that like companies like Tesla and companies like, Blink and companies like Nio and shit like that are at the forefront of really hot specific, like it's tech, but it's a very specific EV, like sustainability play. And I think that more companies are catching that wave. But anyways, I really appreciate you guys watching, tuning into me. Like I said, give me a quick follow here. Give me a quick sub. Give me a quick like. That makes me feel better. Real_bullish across any socials that you got. Engage with me. I love to hear your guys' takes on stuff. I love to argue with people, not argue. I love to have conversations with people. So that it's definitely interesting to me. But in the same time, hey, I appreciate you guys. Have a good week, and I hope nothing but prosperity your ways. But also remember, protect your chicken. No one gives a shit about your money. You got to give a shit about your money. All right, peace.